start watching it, how it moves, how it flows, how it reacts, what happens during a news event, when the market is slow. We all have to reference these things, and these things can, in fact, all be referenced when we trade. Price action is not just more than just watching the price. It's more than that. Okay? So price action is more than just watching the price. I want to be ready. I want to wait. I don't want to be blind. I actually take very little trades during the day because I wait for the setups to occur. I don't just jump in ahead of the curve, or I don't jump in unnecessarily. I always wait for the perfect timing for the actual trades to follow through and to come through. Now, when I see here, ignore all other influences, it's important to know that when we do trade and we have the news on, or we have already a predisposed notion that the economy is bad, and that we're ready to tank and we should all be thinking about selling, I want you to ignore all those things, because as an example, today we had news that was very negative as far as I could tell after the market, that the jobs and the workforce and the economy, but yet the market did the absolute opposite of that. All right, so I don't want to necessarily concentrate on the actual news events, because they do not tell me what's about to happen in the market, right? This is today, right, with the Atlas line, and you can see that even with all that negative news, what do we have? We had an up market, and anybody trying to pick tops or trying to go short got beat up pretty bad. So I just wanted to show you that, because I don't think that really watching the news or listening to what they have to say helps us when we trade, okay? Indicators that try to catch scalping will always be behind. So if you're scalping the markets and you're using those type of indicators, I want you guys to think about not looking at an indicator to be scalping, because it's always going to be behind the curve. I am going to show you some examples in the coming slides here in a couple of minutes that may help you actually understand why indicators do not work and they're not leading when it comes to trading. Okay. The next slide here I have here is entering right. How do we do it? Well, there's something in the market, and I try to touch on this every time I do these presentations, because these are actual terms and things that professional traders do. Not a lot of traders know about them, and therefore each time I get a chance I try to go over it. Front running a trade and actually watching the price is very important. And I'll give you a perfect example here. Let's say that price was attempting to get to the number 60 right there. So we have the first candle here that attempted to go to 60, right? Didn't make it, right? Regardless of what market we're looking at, just say it's a generic number of 60. The next candle came in, and we actually were looking at getting 60 as a profit, as an example, or we're trying to sell it at 60. But you can see here that price attempted a second time and failed. Okay. Here we have a third candle attempting again, a third time, to go to 60. See that? And we have a fourth candle. Now, if I was looking at this market and I was trading it, I would say to myself, and I would see what the price action is telling me. I would say to myself, 60 is never going to get hit. And if it does get hit, it's got to go through it for me to actually get filled. So front running a trade is when you see a scenario where you're trying and you're attempting to actually get filled, and the price is continually attempting to get there and it doesn't. Put your entry point or your limit order to get out of the market or limit order to get into the market one tick in front. Front running a trade, that's exactly what it is. You're front running that number in order to guarantee you a fill. Now, I'm not saying to look at it the first candle or second candle, but we have 4 candles here in a row that are demonstrating that type of price action. You all should understand that something is happening here in the market. It's not an indicator that's telling you you're not going to get filled there. It's actual price demonstrating to you that it's trying to get up there and it's not doing it. All right. So think about front running a trade when you trade. And you see this kind of example when you see 3, 4 candles attempting to go to a certain price, failing just beyond it or just before it. You're never going to get it. If you had a profit target of 70, you can see that 70 would never get hit. We're getting resistance here. Okay. So think about what front running means and how to use it to your advantage when you trade. Okay. Now, indicators versus price action. I have a few articles on the net about what it is really when it comes to indicators versus price action. And you guys are free to look those up and see my articles on it. But if you looked at the market lately, you can see that indicators have been very hard to use because of the chop back and forth, because of the pop that occurs in the middle and in the later afternoon, and then nothing in the middle of the day occurs. Very slow price action. You're just getting chopped back and forth all day long. It's very hard to trade this way. So when I look at an indicator versus price action, I want to be clear with what I'm doing. Okay. My idea of trading late and being chopped up is not the way that we are going to succeed. All right, we should maintain always on the right side of the market, either long or short, and understand what's happening in order to go long or short. I use the Atlas line to get me long or short based on what's occurring. Now, the recent market activity has been extremely erratic, right? Some days there's nothing happening. Other days it's a little bit more volatile, catches us off guard. We have pops, and then nothing happens the rest of the day, and then a couple of candles, maybe half an hour of a strong move, and then stop again. It's difficult to trade this. It really is. It's not as if we can just put on trades and hold them, right? Now, I have this demonstration here that I want to show you. And I try to show this really because I want to demonstrate what it means to me when an indicator works and when you're following price. Okay? So as an example, you see here number one. Number one here says price makes a move up or down, right? But in actuality, the indicator is not doing anything. While the price is moving up or down, that indicator you're looking at is waiting for the actual candle to close in order to plot something. Okay? So now on number two, the price bar closes. It made a move up or it made a move down. Maybe it was a doji. Maybe it didn't do anything. But it made a move. And only at that point is when the indicator actually calculates what happened. But we fail to understand that the move is already over. The indicator is plotting something on your chart that in essence is old, that has already occurred. All right? Now, in number three, price is now on a new move, right? On a 5 or 10 minute bar, it's going up, it's going down, it's fluctuating, it's ranging, but it's doing something. It's going in one direction or another. But yet that indicator, either moving average or stochastic or whatever it may be, it's actually just waiting for that candle to close in order to plot. When the price bar or the candle is finished, it's done with its move. It's made its move. It went up or down. And now, after it closes, it's on a new move, a new up or down move. But yet, the indicator is plotting on the chart based on something that has already happened. All right. So this is important to understand because you're always a step behind of price. So number 4 here, the price bar closes, the move is over, and the indicator now plots what just occurred. All right, so I want you to understand really that an indicator is always one step behind. Okay. Now, how do we think as traders? Right? We never think, look at the market, it's going up, or look at the market, it's going down. We always think about the contrarian thing to do. Right? Most traders do not look at the actual chart and say to themselves, the market's moving up and I'm going to follow.